Nigeria's equities index hit a new record high on Tuesday, crossing into the 83,000 points territory. Despite current economic headwinds and lingering concerns about the strength of the country's economic recovery, investors continue to bet big on the market. So joining us to help us make sense of it all is Johnson Chukwu, CEO, Kari Asset Management. Thank you so much for gracing our show.
Good morning, and thank you for having me.
To what can we attribute this rally to 83,000 points? That's quite huge in some numbers or in some quarters. How do you see it?
You know, the most logical thing that's happening here, we can actually ascribe it. We have to use a single word: exuberance. And I'm saying this with all sense of seriousness that the kind of market rallies we've seen this year can only be attributed to market exuberance. Because as you know, the economy is not really growing materially. We saw the third quarter of last year, the economy grew only about 2.54%, after growing at 2.51% in the preceding quarter and 2.31% in the first quarter of last year. So, and I've even mentioned the expected growth of the economy by the World Bank, about 3.3%. Well, at this year alone, the capital market has gained over 11.56%. Yesterday alone, it gained 3.55%. And with that, and remember that the previous year, that was last year, the market gained 45.9%, as approximately 46%. So you can't really relate the market rallies we've seen with the underlying businesses in the economy. We are still dealing with low consumer spending. We are still dealing with very slow economic growth rate. So if you have to use a single word, I can only ascribe it to exuberance. And of course, we know sometimes the market can be very exuberant and will record gains that are beyond the intrinsic values underlying equities.
So if you're saying this is just an initial rush, or in some quarters they call it initial gra-gra, how much longer can the market keep up with this momentum? And of course, as at what time should we be expecting probably a downturn or realities to set in?
Well, the reality about market is that one will not be able to predict when the market if the market will correct or when the market will correct. But all factors point to the fact that the market should correct sometime in the future. I don't have any special skill to determine when that future will be. But there are factors that could actually trigger that correction. One of which is that the central bank comes up with a higher yield on fixed income instrument. Of course, one of the things driving portfolio investment into equities because alternative asset classes are generating very low yield. So if you look at the fixed income space, we've seen some level of uncertainty or some level of unusual movement in terms of yield. We saw the yield late last year go as high as 16.75%, only for it to come down to about 12%. I'm talking of 364-day treasury-based instruments. So, and that simply means that investors who want to have liquidity to invest in are not particularly attracted to fixed income instruments. And that's why you're seeing almost all the capital going into the equities market. But you're also seeing a shift syndrome also going to the market because some people have gone to the market, they've gained massively. We've seen an instrument that gave returns above 1,000% the preceding year, last year. People are now getting to a point where everybody is quite aggressive going to the market. And that's one of the concerns that always precede a market correction.
Well, you talked about portfolio investments. Let's now look at the planning. What would be a mix of stocks to own now or consider as an investor who's actually looking to either jump in on the rally or maybe just revamp current stock positions? What's your take?
Well, the list will depend on the investment objective of the individual. For us in Kari, one of the things we do is that we do a diagnostic analysis of the individual who wants to invest. You first of all ask the person, what's your investment objective? Are you looking for short-term capital gain? Are you looking for dividend, consistent return on your investment, which is dividend income? Are you a strategic investor? You are looking at taking a material equity position in a company and getting to the board or taking over the company. So we look at all these factors. And then if you are somebody who is looking for regular stream of income, we will advise you on those counters that likely pay full year dividend and interim dividend on a consistent basis. And then we'll tell you to stay in that. If you're looking for short-term capital gain, we will also advise you on the stocks that we think still have some intrinsic values and the current market prices are not materially above their underlying asset value. And then we'll advise you on that. So it's not something you just say casually. We are, when it comes to financial issues, we're like medical doctors. When you go to a doctor and say, I have a headache, they will first of all carry out a basic check to know, to know what's led to the headache, and not just tell you, okay, go and take this drug to just kill your headache. So we will advise people based on who they are, their station in life, including their cash flow, their current cash flow, their age, are they still in a position to take risk, and some of those factors. And then we will also look at companies that have strong fundamentals. For now, investors should focus on fundamentals and not just look at current market price. You must look at, does the current price reflect the underlying intrinsic value of this asset? And if it does, then you can take position in that instrument.
Well, then, in 2023, Nigerian stock investors made a decent returns. But then, with inflation forecast to climb this year, for then shrinking consumer wallets, many people may be looking to the equities market as an avenue to boost their current incomes. So, can the stock market make people rich this year?
Well, people who came into the market even at the beginning of the year has already become rich. I mean, with a return of more than 11.5%. An investor who came in the first trading day, which was, I think, on 4th of this year, had made good money. And today is just 10th of the year, 10th of January. And then those who came in early last year that took a basket of entire portfolios in the equity market, which nobody does. They made about 46% return. But even if you look at the gains we've seen this year, there are some stocks that have gained more than 30% in the past few days. So there are opportunities always in the equity market. Even when the market turns south, there will still be opportunity to make money. The key thing is you must trade cautiously. You must seek for the opinion of a financial advisor who understands the market. You must do the dirty work of carrying out detailed analysis of instruments you want to invest in. You must carry out your top-bottom approach analysis of instruments you want to invest in, including the macroeconomic environment, the sector the stock belongs to, and that particular entity, the corporate entity you want to invest in. These are simply none if you have to make money in the market on a consistent basis.
Oh, you talked about the upswings and downswings of profits and profitable stocks in the bourse. So what are the top stocks at the moment that people should be looking out for?
Well, you must have observed that I stay away from such what I may call flippant recommendations. For me to tell you which stock to look out for, I will only need to know your investment objective. In every sector, there are opportunities or instruments you can invest in, but I need to know what are your investment objectives, which I have itemized earlier. I always say it's a casual approach on, or if you just come to everyone and say, come to a public national television and say, look, these are the best instruments to invest in, without carrying out determining what the objective of the individual that wants to invest in those instruments. Each of the investors have different objectives. So it's a casual approach to just name instruments. I can tell you sector that are still vibrant, the banking sector is still vibrant, the upstream, the oil and gas sector is vibrant. But when I say the banking sector, it will also not be appropriate to say every instrument in the banking sector is a good instrument to invest in. When I say the oil and gas sector, I have to be specific on which sector. I have actually gotten to the point of saying, okay, the upstream sector, even in that downstream sector, there will also be good counters you can invest in. The food and beverage sector, the building material sector, each of these sectors have instruments that have strong values, but some are, there are also instruments that I may not be able to recommend, even in this sector that I mentioned.
All right, Johnson Chukwu, CEO, Cowrie Asset Management, thank you so much for your time on the show.
Thank you for having me.
You're welcome. Now, despite the caveats, the Nigerian stock market's record-breaking performance is a welcome sign for the country's economy. It indicates that investors are willing to look beyond current challenges and see the potential for growth in the years ahead. But then there is a cause for caution, even as Chukwu said this morning, saying that, oh, it looks bright, but then one would need to be careful in terms of where or when you want to put your money in to reap dividends from. We'll go on a short break. When we're back, we'll look at our next conversation. Don't go away. Nigeria's economy is set to outpace global forecasts, with the World Bank projecting 3.3% growth this year and 3.7% next year. The optimism stems from oil and forex reforms, pushing Nigeria's growth projections significantly higher than earlier estimates. However, while the economy takes off, airfares are soaring. November saw an 11% year-on-year rise, with single journeys averaging about 81,334 naira. Meanwhile, the Dangote Refinery is preparing for takeoff. NNPCL will supply 4 crude oil cargoes to the soon-to-be Africa's largest refinery, and the refinery aims to end fuel imports and even export to neighboring countries, so we're told, potentially reshaping the Atlantic Basin market. This morning, Sam Chidoka, MD Kairos Capital, joins me to unpack this. You're welcome.
Thanks for having me.
Now, looking at the World Bank's projection of a 3.3% growth for the Nigerian economy, what are your thoughts on this?
Well, the World Bank has always been bullish about Nigeria. If you check previous projections, they've always been projecting that Nigeria will grow at over 3%, most of their projections. We've not been anywhere near there, or well, not near 3% in the near future. We've seen about a 2.5% growth in recent past, and the World Bank projects that we will get to 3.3% as it is. That's good in terms of bolstering investor sentiment for the country, especially for those from outside the country. But within the country, clearly there are things we need to do to make sure that we are growing at that sort of level. Because if you check the fact that population growth is probably at 3%. Every time we have a growth less than 3%, it means that it's suboptimal in terms of growth levels. So clearly, the handlers of our economy need to sit up and fix a few things before we can get to such growth as the World Bank has projected.
Coming off the reforms being undertaken by this administration, many analysts and projectors for the year have said that this seems inspiring. This actually speaks to the confidence in the reforms, if I could add. But beyond numbers, Nigerians want to see visible impact. You have also said that domestically something needs to be done to see that the ordinary Nigerian on the street feels this positive impact. They're able to take home something that will make their life worth the while. So how can the government ensure this translates to better living standards for the citizens?
So for the handlers of the economy, I sort of feel for them, because the average Nigerian gauges the economy by his purchasing power ability, gauges the economy by how much of inflation, food inflation especially, that they have to grapple with, how much of salaries, unemployment, insecurity, and all of those things. However, truth be told, the effect of your economic decisions today only happens tomorrow, right? So we've seen some basic reforms. We've seen removal of fuel subsidy, which some of us have clamored for. However, in recent time, we've seen some sort of return of fuel subsidy, however, on a declining scale compared to what we used to have. We've seen also the fight against inflation. We've seen also an attempt to right price the currency as regards a comparison with the dollar. So all of those are steps in the right direction. However, for the man on the street, you're not going to see the effect immediately. The things that caused the economic woes that we face today didn't happen in one day. So what we need to take it away is not going to happen in one day. I might sound like it's not what people want to hear, but it's just common economic truth. For the handlers of the economy, part of the things that one expects to see is that we expect to see investment in key aspects of the economy in terms of our time and our ability as government. Number one, I would say, is human capital development. You need to deal with healthcare. Only a healthy population can bring about growth. You need to deal with education. If you don't have an educated population, over time, you're going to notice a slide. You need to provide infrastructure like power. If you don't have power, small and medium scale industries will struggle. Aside from all that, you need to deal with security. Insecurity is a problem. When people go to the farm and you can't move your product from the farm gate to the market gate, you're going to have a major challenge and you're going to have inflationary pressure dealing with that. You also have to deal with policy consistency. People have to be able to gauge where the government is going, what the government is going to do, and all of that. And there has to be a strong handshake between the fiscal part of the economy and the monetary part, unlike what we saw before. We think that when you start to do these things in a shorter than long period, people will begin to see the effect on the streets.
Now, another aspect that we may need to look at is the aviation sector, and of course, it's affecting a lot of people and their purchasing power. Now, the cost of airfares rose by 11.01% on a year-on-year basis and 3.24% on a month-on-month basis. So, is this likely to accelerate in the year 2024? Looking at the factors that are actually affecting this, you've talked about the naira-dollar parity, this issue in that, the floating of the naira that has opened that particular access to the influence of global pricing. When we talk about crude oil, it has to do with diesel also. So when you look at all these attending factors, how do you think that would affect the aviation industry in terms of fares being paid?
Well, for us as a crude producing nation, we have a double-edged sword affecting us. When the price in crude goes up, we get more revenue because we sell. Oil and gas provides perhaps up over 80% of our FX revenue as a country. So the more the price of crude goes up, the better for us in terms of revenue. However, the more the price of crude goes up, because we're not producing locally, we're not refining locally, things like aviation fuel and the PMS as well, the prices of those things will go up because you're now being affected by the push on cost because we're importing those things. That's what has happened to aviation fuel. Last year, we witnessed aviation fuel scarcity, and that affected price moving up. We've also witnessed increase in pricing in aviation fuel. We've also seen increases in handling charges for the handling companies that handle charges at the airports. And for the airlines, you have to pass this on. You have to realize that the airline business has very thin margin. As a matter of fact, there are not many profitable airlines in the world. And so it's a business where if you want to be profitable, you need to take in every profit. Also, it's an industry that is very strict with compliance and servicing and all of that. So they spend a lot of money servicing their airline, their aircraft, spend a lot of money on safety and security. You've got to find a way to get it back if aviation fuel also is on the increase. So I think that what needs to happen is local production. The good news coming from Dangote Refinery is music to our ears. Perhaps when we start local production, some of the cost elements in terms of freight costs will reduce.
Aside that, are there other attending effects that you would expect from the Dangote Refinery, even as it begins to refine crude? Because you've talked about the low refining capacity of the country, but now that we're seeing that this major market or business is coming on board, and that would help in some way. Are there other areas that you feel that the Nigerian government, or Nigeria as it were, would benefit from?
Oh yeah, a 650,000 barrel per day refinery is a huge investment in the country, right? So what you're going to see is that Dangote Refinery will help with job creation. It's going to employ thousands and thousands of people, so help to reduce unemployment and create jobs. The refinery is going to help to open up the axis where the refinery is. If you know anything about real estate in that axis, you know that there's been an upswing in real estate around that axis. Also, the refinery is going to have to open up key infrastructure. You see that both the refinery itself, the state governments and the federal governments are beginning to work on the key infrastructure, road and access in that whole area. And more importantly, the Dangote Refinery is going to solve the problem of availability of refined products. Gone will be the days of strikes, of low supply of refined products once the refinery is up and running. It would also help us to reduce the cost. However, I must warn that when we speak about reduction in cost of the product at the pump, the fact that you are refining at Dangote Refinery, what's going to happen is that the freight cost, the difference between importing a refined product from India or from Europe as against getting it in the back streets of Lagos will affect the cost. However, the cost of production will not materially change, right? So when people think that when Dangote starts, price of fuel is going to go half the cost, I do not think so. However, there are lots of gains for the economy with such a massive project like the Dangote Refinery and perhaps other refineries to come on stream.
To let you, before I let you go, Sam, let's quickly just touch on the value of the naira, the depreciating value of the naira, forex scarcity, and all whatnot. Now, we also know that the federal government is trying as much as possible to clear the FX backlogs, but then we're still having issues. It's still persistent in that areas. Would you recommend a reform, or are there any measures that can be put in place to deal with these situations? It has actually persisted for too long, and a lot of businesses are being affected by it. The inflation is on the rise. How do we deal with it?
Well, so for the naira, the simple solution is just that we have to make more FX. As I said before, oil and gas gives you over 80% of your FX revenue as a nation. That's not sustainable. You need to diversify that. We need to look at other aspects of the economy that can bring in much needed FX. We need to be productive. Many of the cargoes that bring in imported goods into Nigeria go back empty because we're not exporting much, right? We need to be self-sufficient in many aspects of the economy and then start to export. So perhaps, maybe soon we'll begin to export refined products. Maybe soon we'll begin to export more of agricultural products. Maybe soon we'll begin to export some manufactured products. But for you to do that, the key infrastructure has to be in place. One of them being power, and another one being security, so that people can be productive. But the easy solution to our exchange rate crisis is the fact that we just need to be productive as a nation. As of today, we're not productive enough. We're not exporting enough. We don't have enough FX. Also, the inflationary pressure is quite high. MPC didn't meet last month. We expect that MPC will meet and we'll see the monetary policy direction, especially with the new CBN. We expect that it will still be towards reducing inflation because it's biting hard. So for the currency, I think I would advise most to buckle up our belts until government provides enabling environment where we are productive and everyone of us keys into it to import less, produce more, export more, get more revenue, and then we have enough currency in FX to work with.
Sam Chidoka, MD Kairos Capital, thank you so much for your time.
Thanks for having me.
Let's now go on a short break. When we return, we'll bring you international business stories. Don't go away. Oil rose on signs that U.S. crude stockpiles are continuing to drop, and as more attacks on vessels in the Red Sea raise the risk that Middle East supply could be disrupted. Brent gained towards $7 to $8 a barrel, while West Texas Intermediate neared $73. The American Petroleum Institute said nationwide inventories fell 5.2 million barrels last week, with levels of cushion also down. The Energy Information Administration, meanwhile, forecast a narrow global supply deficit. Asian shares retreated on Wednesday after a lackluster session on Wall Street, though Tokyo broke ranks, gaining more than 2% as the weaker yen lifted stock prices for export manufacturers. U.S. futures declined while oil prices gained. Tokyo's Nikkei 225 is trading near a 34-year high, gaining 2.1% to 34,465.00, helped by heavy buying of chip makers and by speculation that the Bank of Japan may not opt to change its ultra-lax monetary policy as soon as thought after wages fell for a 20th straight month in November. And finally, we tell you that Bitcoin dropped to around $45,000 before powering losses after a false post on the U.S. Securities and Exchange Commission's X account claimed that the agency had approved the issuance of ETFs holding the digital assets. The regulator subsequently said it had not yet granted approval of spot Bitcoin exchanges, traded funds, and that the X account had been compromised. Market participants were caught off guard by Tuesday's cybersecurity incident. The SEC is widely expected by analysts to announce a decision about the ETF applications on Wednesday in the U.S. Meanwhile, Bitcoin traded at $45,900 as of 7:20 a.m. in London on Wednesday, and the token had surged to a 21-month high of more than $47,000 on Tuesday as optimism grew that approval of the long-sought ETFs was imminent. But I want to take a look at African startup ecosystem outlook. To stay with us. Nigeria lost the top position in terms of startup funding in Africa to Kenya in 2023, as startups in the East African country attracted the largest amount of funding in the year, topping the table with about $800 million. This is according to the analysis of the African startup funding in 2023 released by research outfit Africa, The Big Deal. The analysis of the Big Four in Africa, comprising Nigeria, Kenya, Egypt and South Africa, shows that Nigeria slipped from the first position it had occupied in 2021 and 2022 to fourth position, as startups in the country raised the least amount of about $410 million, less than half of what it raised in 2022 and 2021 compared with the other three. This morning, Sean Dania, CEO, Alpha Geek Technologies, joins me to shed more light on this. Thank you so much for joining us.
Good morning. It's a pleasure to be here.
So having gone through the report, one question would come to mind. How did Kenya pull $800 million in startup funding last year, doubling what Nigeria was actually a long-stander as Africa's startup kingpin pulled for the year? How did they pull off that string?
So first things first, we need to always understand that during an election year, things go south, and especially when there's a change in administration. So there's a lot of, investor, sentiments, everybody resentment. Everyone is trying to look out for, what the new administration would, bring into play to see how that can be of advantage to their investments. But on the flip side, Kenya also strategically, in the Kenya startup space, we could see a lot of diversification. So while Nigeria primarily, focused on fintech, Kenya, we saw strong growth in development in their e-commerce sector, logistics, agri-tech. Those were able to attract broader investor interests, as opposed to everyone just focusing highly on fintechs as well in Nigeria. And of course, the Kenya regulatory environment is more predictable. They are supportive compared to Nigeria. So that also boosted investor confidence. And there's a huge talent pool of young resources, tech-savvy people. In Nigeria, unfortunately, we are suffering from the jackpot syndrome, where the young people are leaving the country. We do not have the same case in Kenya. So evidently, most of the young people who are tech-savvy, who are developing their talents, are able to put in those talents and build their startups within the country.
While Kenya suffered a decline of minus 25% year-on-year, its share of Eastern Africa's funding grew from 86% in 2022 to about 91% in 2023. And according to reports, 93 startups raised about $100,000 or more during the period, approximating to about 19% of Africa's total. So how important were these funds for the Horn of African nations, and will that have maybe a positive spillover on the region?
In the general startup space, we saw a lot of, there was a huge reduction in, startup investments generally, VC funding, due to several circumstances. But on the Kenya side, yes, there was a drop, but it's still, that has also been encouraging, So the increased funding in Kenya, has inspired the entire of the East African region, There's a lot of collaboration going on, knowledge sharing. So that's a positive impact, the positive spillover for the rest of the East African region. And of course, as more funds come into the country, they're able to retain talents, train talents, people are more educated, they're able to put in a lot of investments, all these African startups, would lead to investments in infrastructure that can actually improve the innovation ecosystem across the region. You can see development of hubs whereby a lot of training is going on, active facility. All the telcos are also ensuring that they are making sure that broadband access is available. So these things will definitely, the spillover is always positive. We'll always see the full effect on the area, on the country and the entire East African region.
Now, for Nigeria, $410 million, a staggering 66% decline from the previous year, showed a market that's said to be struggling. So are investors disturbed about a trend that we don't know that is actually fueling this headwind in the country's startups? Because when you compare that to Kenya, Kenya's ecosystem was described as being innovative, having a young, tech-savvy, vibrant population, and a supportive regulatory environment. So what is it about Nigeria, of course, for the country having to have lost the pace in this discourse?
So for Nigeria, like I mentioned earlier on, there's a change in administration. But let's still give it to the previous administration under the leadership of, the still current head of the DG of NITDA, from the presidency, we actually, the legislative, they passed the startup bill, whereby they formed the committee to actually look into how we could get investments for startups and develop the startup space. So let's still give the Nigerian government, some credit. They're able to, put that into. They were able to put that bill, and then we can see that the new Minister for Innovation, Dr. Bosun Tichani, has also put that, startup bill as part of things that are his agenda to develop. So the government definitely will be working on, encouraging that startup space. However, the regulatory landscape needs to be clear. We need to be able to support our startups, with infrastructure. There has to be incentives, for startups. Because building a startup is not easy. Getting funding is not easy. The current Nigerian landscape, there are no incentives, pioneer startups or tax incentives for startups. So pretty much people get foreign investments, and then they are exposed to high volatility in terms of, FX rates. They are doing business in naira, and the naira is constantly losing value. Then you have to pay back your investors in US dollars. So it becomes that's why you see a lot of startups may fold up. So the government's responsibility in all of this is to ensure that we have a stable foreign exchange market primarily, and then also support with things like the Startup Act bills, tax incentives, and whatnot.
Well, none of the challenges you've mentioned, the country still boasts the continent's largest pool of startups and continues to produce innovative solutions across various sectors. So for 2024, do you see a rebound? You've talked about a few things that can be done, but then do you see a rebound in investment inflows for the country, looking at the level of resource that it has?
And so we'll put it that the new administration, so we'll cut them some slack, right? Because we see that they're already making some moves. We need to wait for all those things to manifest, But if they don't, I do not think we will see a rebound. Let us not forget that these startups and these foreign investments that we're talking about, half of these companies no longer become Nigerian companies after they raise this capital. So the government, we have to be able to look inwards, see how we can raise money within the country. There are a lot of Nigerian businesses, Nigerian companies, Nigerian entities who have a lot of money. They should be investing in Nigeria, in our own African startups, so that we are fully owned by Africans and Nigerians, and so that the returns on the investment actually stay in. That way, then we can actually reap the benefits of all of these monies that we are talking about. I believe that there can be a rebound. We just need the government to put the work in. Our founders are putting a lot of work in. We have a lot of startups, springing up every day. We have a lot of technology hubs across the country, but we need a good environment that can actually let everybody thrive and raise money locally, so that we can retain all that money locally.
Let's now look at the second and the third position occupied by Egypt and South Africa. Now, for Egypt, 48 startups were recorded to have raised about 100,000 plus in 2023, and this came as the lowest number out of the big four. Regardless, Egypt still rose to the second position in terms of inflows, and the Rainbow Nation came third. So doesn't that mean that the numbers aren't also doing great in these two countries? And the fact that they are occupying these two positions is just as a result of the fact that Nigeria is being inept in growing startups in its, of course, in its domain.
So the VC, the venture capitalist funding, space, for last year, there was a huge decline in investment. And that is, I think, all the VCs are trying to re-strategize because there's been, a higher number of failed African startups, if I could put it that way. So evidently, there's been a huge reduction in investments globally. And of course, that will definitely affect Nigeria. So yeah, those numbers, Nigeria being inept is one of them. But yeah, the numbers affected everybody. So basically, the VCs are being more careful, looking through with what kind of startups they actually put their money in. Unlike, not like they were throwing money at everybody before, but at some point in time, the African startup seemed very, very viable, because the entry level was very low, so we are talking about 100 grand, 200 grand in US dollars, which averagely wouldn't even cut it for a US-based startup or a UK-based startup. So it seemed like a very, very low entry point. The return on investment was higher, looking at the numbers in Africa and, the population size and, the market size essentially. But, people then have noticed that some of these startups have folded up. It's very proper to, reconsider their investment strategies. But I believe that this year would see those numbers rise. South Africa, Egypt, Kenya, they have stable economy, stable FX rates. They might still retain, but I think Nigeria will definitely rebound.
To wrap it up, Daniel, it's been said that increased investor interest in Africa benefits the entire continent. So at this point, would it be better for collaborative efforts in startups across African countries? Do you think that should suffice as of now for more investments in supporting Pan-African solutions? Would you advise that?
Yeah, I agree 100%, that we need to share resources and expertise. There's a lot of collaboration that can help, startups scale across borders, across the larger markets and, benefit from, we can also do joint fundraising efforts, because what it is we have businesses who are replicating the same thing across we have people who are replicating the same businesses across different countries, So you have a particular startup who is doing big on, let's say, logistics in Nigeria, or a big e-commerce store in Nigeria. There's a different big e-commerce store in Ghana. There's a different one in Kenya. We have fintechs who are spread across all these countries too. If we're to go, build a united front for the African tech ecosystem, they can strengthen Africa's voice and can help us to actually get a good strong footing, in the global tech scene and attract more international investments and also local investments. Yeah, I think Pan-African collaboration is definitely the way to go.
Okay.
We're able to build bigger entities and stronger institutions.
Sean Daniel, CEO Alpha Gig Technologies, thank you so much for sharing your thoughts with us.
Thank you very much for having me.
You're welcome.
Have a great day.
And you too. And as we move forward, it is essential to celebrate Kenya's remarkable achievements while acknowledging the ongoing struggles of Nigeria. Both countries have valuable lessons to share, and of course, they have this continued partnership in the African startup race that will undoubtedly shape the future of innovation on the continent if all can pull their resources together. And we hope that that would happen for the growth of startups in Africa. Thank you so much for being part of today's edition of Business Edge. And you can follow us on social media. We are at News Central TV. You can download our mobile app on App Store and Play Store and visit our website, www.newscentral.africa, for other engagements on these platforms that I've shared. My name is Lekan Onabanjo. Enjoy the rest of your day and have a fantastic day.